5-minute tax guides from your 5-minute tax guy. Short lessons to help you navigate the treacherous, hazardous, and totally unpredictable U.S. federal tax code. The child tax credit is one of the most popular subjects for taxpayers because it's one of the most beneficial credits for taxpayers with children, whether married or not. And I have some great news for you. For 2018 and going forward, the child tax credit has been doubled to $2,000 per child from the previous amount of $1,000. That's fantastic, 5-minute tax guy. How do I take advantage of this amazing credit? The child tax credit is actually two credits. One, called the child tax credit, is a non-refundable credit and can only be used to offset a tax liability. It cannot be refunded. The other part of the credit is called the additional child tax credit, and it is refundable up to $1,400, which is adjusted for inflation after 2018. In this video, due to time constraints, I will be covering only the non-refundable child tax credit. See my other videos in this series for the additional child tax credit and other valuable tax credits that can save you some tax dollars. First off, there are some limitations and restrictions related to this credit, so let's get them out of the way first. In 2018, the credit begins to phase out when your MAGI, or Modified Adjusted Gross Income, reaches $200,000, or $400,000 for joint filers. The credit amount decreases by $50 for every $1,000 or fraction thereof by which the taxpayer's MAGI exceeds the threshold amount. This means that at $440,000 for a joint filer, the credit is reduced to zero. Your earned income must be at least $2,500 to qualify for the credit. Both you and your spouse, if you are filing jointly, and the child must have a valid Social Security number or tax ID number, TIN, by the due date of the return, including extensions, to claim the credit. Two important factors to consider. I have seen websites out there that tell you that you cannot claim this credit if you file married filing separately. Take no notice of that advice. That rule applies to the earned income credit, not the child tax credit. And number two, due to changes in the law, if you claim the ACTC, EITC, or AOC on your income tax return, the IRS cannot issue your refund before February 15th. This applies to the entire refund, not just the portion associated with the ACTC, or Additional Child Tax Credit. Hardship claims for these refunds will not be accepted prior to February 15th, as this refund hold is required by law. Just as an aside, if you are claiming any of the refundable credits mentioned in the previous screen and you need your refund prior to February 15th, there are tax preparation services out there that offer refund advances so that you can get at least some of your refund prior to that February 15th restriction. Be aware that this refund advance is a loan, and the bank that makes this loan may charge you interest on the refund advance. However, some do not. Just make sure that you go to a reputable tax preparation service. They should not charge you any extra fees to qualify for the refund advance beyond interest associated with the advance, which is charged by the bank, not the tax service, and the interest, if any, should be reasonable. So the child tax credit combined with the additional child tax credit is a credit of up to $2,000 per qualifying child. There are certain tests that a dependent must meet to qualify for the child tax credit, and these tests are: number 1, the relationship test; number 2, the age test; number 3, the support test; number 4, the residency test; number 5, the joint return test; and number 6, the citizenship test. The relationship test. To meet the relationship test, a child must be related to the taxpayer in one of the following ways: the taxpayer's son, daughter, or stepchild, legally adopted child, or a child lawfully placed with a taxpayer for legal adoption, eligible foster child placed with a taxpayer by an authorized placement agency or by a judgment, decree, or other order of any court of competent jurisdiction, brother, sister, stepbrother, or stepsister, or a descendant of any of the above, for example, a grandchild, niece, or nephew. The IRS is fairly generous in their definition of a child. An easy way to remember the relationship test is just to remember child, sibling, or a descendant of such. You cannot claim your parents, uncles, aunts, or grandparents. Another important point to keep in mind is that a qualifying child relationship established by marriage is never dissolved by divorce or death. In other words, if you have a stepchild and you become divorced from the parent of that child, then that child is still your stepchild. This also applies if the parent of that child dies. And this means that you can claim your stepchild even if you become divorced from the child's natural parent, if that child passes all the other tests to be a qualifying child. The age test. This one's pretty straightforward. To meet the age test, the person must be one of the following: under age 17 at the end of the year. Note that this is different than the test for a dependent child or for the EITC, which is under 19 at the end of the year. A full-time student and under age 24 at the end of the year, permanently and totally disabled at any time during the year regardless of age. And in addition to the above rules, the dependent must be younger than you or younger than your spouse if you're filing jointly unless disabled. Support test. To meet the support test for a qualifying child, the child cannot have provided more than half of their own support for the year. Pay close attention to the wording of that statement. It does not say that the taxpayer must have provided more than half the dependent's support. This means that if, for example, the child's grandparents paid all of the support of the child while the child is still living with the parents for over half the year, then the child would still meet the support test because the child did not provide over half of their own support. The residency test, again, pretty straightforward. To meet the residency test, the child must have lived with the taxpayer for more than half the year. However, exceptions exist for temporary absences, such as hospital stays, vacations, school or summer camp, children who were born or died during the year. A child who was born or died during the year is treated as having lived with the taxpayer for more than half the year if their home was the child's home for more than half of the time that they were alive during the year. Kidnapped children or children of divorced or separated parents. The dependent of taxpayer test. The person must be claimed as a dependent on your tax return. If you are a custodial parent entitled to claim the dependent, but you allow your non-custodial spouse or ex-spouse to claim the child by giving them a signed Form 8832, then you cannot claim the CTC, Child Tax Credit. However, you may still be able to claim the Earned Income Credit, or EITC. The joint return test. To claim a dependent, that dependent may not file a joint return unless that joint return is filed only to claim a refund of withheld income tax or estimated tax paid. Citizenship test. The dependent must be a U.S. citizen, a U.S. national, or a resident of the United States. That's it for the child tax credit. And yes, I know I went over my 5-minute limit, but hey, this is a complicated subject with lots of material to cover, so cut me some slack, okay? And I did tell you how to snag up to $2,000 for each one of those little darlings that you have living under your roof. And I did tell you how to receive some of your refund prior to February 15th if you're in a bind. So I think we can agree I did okay. Right? For more great 5-minute tax guides, check out the other videos in my 5-minute tax guide video series. See the list in the description below this video.